All right, let's give it a few seconds here and see if anyone joins today's live. So it's the third live we've done here. So we are on Facebook and YouTube today. So we're not going anywhere else. We're just on the Rooshock Accounting Facebook page and we're on the Ethan Rooshock YouTube page. So awesome. Hopefully we'll get a few people joining. We can see a couple joining now, which is really cool. So I'll just give you a bit of a spiel. We're going to go through a few topics today. So I've got a few topics. We're going to talk about things to do before the end of the financial year. We're going to talk a little bit about super contributions and depreciation on assets for individuals on tax returns. And I'm going to answer a few questions that have been asked through the week. So make sure that's what I'll get to at the end. So make sure you leave your questions throughout the video and I can get to them and leave some questions in and give you some answers. And also, for those that haven't checked it out, this is now going to be a podcast as well. So head over to wherever you listen to your podcast, whether that's Apple, whether it's Spotify, search for Tax Talk with Ethan Rooshock, and make sure you hit a follow button, leave a review, and just give it a listen. So for the podcast listeners, good luck. Let's hope it all works, and thanks for joining. So what I'll do is make sure you hit the like button if you're watching on YouTube or on Facebook, because that really helps get it out to people. If you want to share it, even better, that'd be great. And anyway, I'll get into the first topic that I wanted to talk about, which was, so things to consider before 30th of June. So you'll notice that I actually did a video on this on my channel in more detail earlier this week, but there's lots of things that you can put in place before the 30th of June that can help you to save on tax. And they're things that you potentially may not be able to do after that. So I spoke about it, and sometimes you've got to put strategy in place before the end of June, way before you even go and see an accountant or start doing your tax return for them to be effective. So what I'm talking about there is if you want to make a deduction and claim it in the tax year that you're in, obviously you need to make that before the 30th of June. So that was the main thing that I talked about to start with is, okay, if you know that you need to spend something on a work-related expense, make sure you're doing that before the 30th of June. Because I've seen it plenty of times, people come to a tax appointment with a receipt and go, oh yeah, want to claim this. And I look at it and it's from July. And I'm like, oh, sorry, that's going to be in the next year. And they go, oh, I thought I could have claimed that. Now they have to wait another 12 months before they get to actually make that claim. So it's just being a little bit clever of, okay, when do you actually make that claim? But you don't want to be going and spending money on things that you don't actually need. So there's no good going and buying something and go, oh yeah, it was a registration, it is work related, but I didn't really want to buy it, but I thought, I can claim it on tax. Because you're going to be in a worse position overall. There's no good having a $100 expense and getting $33 back on tax, but you're still $70 out of pocket. So you've just got to be considerate of those kind of things. And so some of the other things I spoke about in this other video, so make sure you go check that out, is talking about things like super contributions, which I'll get into in more detail. Things about getting yourself organized. That's a really key one, to get yourself organized before the end of the year, and therefore you're not trying to do that afterwards. So many people go to their accountant or on the day of their appointment with their accountant and they're scrambling around trying to find receipts that they can't find, and then they end up giving up and go, oh, I'll just take what I've got. Or they go into the appointment and go, oh yeah, I bought this and I can't find the receipt, I can't remember how much it was for, oh, look, don't worry about it, don't include it, and therefore they're missing out on a legitimate deduction. So they're really basic of getting yourself organized and just doing that little bit of planning. So I hope that helps. And if you want to see more about that topic, make sure you go check out that video that I've done on my channel. I think it went up last Sunday, and you'll really get more in depth on some of those topics. So it's good to see we're starting to get a few comments come in. So make sure you leave those comments on Facebook or on YouTube. And like I've said before, contact me through the week. I've got a few questions that I can go through because it prepares me. At least I can do a bit more research on a topic, but definitely throw questions at me as you go. So the other topic I want to talk about was super contributions and how to get advice, because I don't have the qualifications in super contributions. So you've got to have a lot of licensing and stuff to be able to give advice in this area. And a lot of accountants are actually moving out of it because it is quite strenuous. The licensing, it's pretty complex. That took me a while to even get my head around what you can and can't do. So you will find that a lot of people think their accountant can give them advice on super, but that might not always be the case. So you can go to a qualified financial planner, no doubt, and they'll be able to give you advice in this area, or you're going to have to do your own research. So it's an area that I think some people go to their accountant and expect it. But what you can ask your accountant is, one, is it something they do deal with? And which, look, like I said, a lot of accountants don't these days, but they may have someone they work with. So for me, for instance, I've got a financial planning firm that I work with, and therefore I can work with them and refer clients onto them, and they can refer clients the other way, and we can work as a team to help a client. Because at the end of the day, I want to provide a service where I'm helping clients in all matters of their financial areas, but I might not be able to technically help them with every single one. But by having referral partners, I can work with other people that have similar business mindset and that want to achieve the same thing for clients. So that's really a good spot to start. Is that if you do have a trusted accountant, speak to them. Do they have a referral partner that they may be able to refer you on to? And therefore you can work as a team with them and know that you're getting someone that is aligned. Because if two people work together on accounting, and it might be mortgage broking, or it could be financial planning, or it might be even a lawyer, if everyone's working in the same way, then it's definitely going to help you get better results. So that's something, that I get asked quite often is about super contributions, and can I help them, and can I give you advice on which fund to go with? And no, it's not something I can advise on, but there's a lot of free information out there. I've said it before, just go on the ATO website and have a read on there on contributions and contribution caps and concessional versus non-concessional. And then also do research into funds about fees and returns, and have a look at the basics of how a super fund actually works. So then when you might be comparing two funds or two different investment options within a fund, you've got some idea, and then you can seek professional advice to get that personal advice. So quite often, professionals may be able to give you that general advice, like what I've talked about, to say, look, have a look into some of these areas. They may help, but they might not be able to give you that personal advice. But then when you're ready, you can go to someone. And I've spoke about this last week, and I'll speak about it over and over again. The more you can educate yourself before going to a professional is, one, you can then kind of fact check that you know that this person knows what they're talking about. And two, you might be able to save yourself some money. Is that if you're only needing help in a certain area rather than a real basic level, that could save you some money, because quite often professional services are quite expensive. So obviously the less time they're having to spend on it, maybe that might help you. So, and then the other thing I want to talk about was depreciation on larger purchases. So this comes back to a bit about what I've talked about of things to do before the 30th of June. But people will quite often rush through a big purchase for an individual. So I'm not talking about businesses here, because that's a whole different area. But they might go through and go, oh, I need a work laptop. I'll replace that before the end of the year. They go buy it on the 30th of June. They come and go, oh, look, I can claim this, can't I? Well, yes, they may be able to claim it, because it may definitely be a deduction. It may be work-related. It may be 100% work-related. But the problem is, if it's over $300, it's likely going to need to be depreciated. So what depreciation is where you claim a portion of that over a number of years. So each asset has a different type of rate. So you can find them online if you do a bit of a search. I think on the ATO, when you actually do the tax through there, I think you can search the assets and it will come up with the rates. But they'll be claimed over a number of years depending on how long that asset's meant to last. That's what the rates are based on. So something like a laptop obviously has a short useful life, because things get turned over pretty quick. They become obsolete pretty quickly. So you get to claim it quite quickly. But the problem is those claims start from the date of purchase. So if you buy on the 30th of June, you're going to get 1 day in that year. Whereas if you buy on the 1st of July, you're obviously going to get that whole year. So it's just something to consider. You will get to claim it. And therefore, obviously, even if you buy on the 30th of June, you're going to get a lot of that claim in the next year. So it's not going to waste, but it might be delayed. You're not always going to get that money back like what you thought. So I think some people get confused and they think, oh, well, if I buy it right now before the end of June, rush that through, and therefore I'm going to get some of that money back straight away. Or some people think they're getting it all back, which that's not how our tax system works. But it is something to be aware of. So now it's going to be different. It doesn't mean every expense over $300. So you might make a donation to charity that's more than that. You don't depreciate that. I'm talking about assets. So for a lot of individuals, it's going to be things like tools and home office expenses. So by home office, I mean laptops or home office setups kind of thing. Depends whether you're eligible to claim these things or not at all. But it is just something to keep in mind. So I hope that's cleared up a few different things there on just some basic things that you can do before the 30th of June that will really, it might not necessarily save you huge amounts, but just by aligning those things, it gets you prepared. Now, if you are watching, I think I've got a couple of likes, so hit that. And if you haven't subscribed on YouTube, make sure you head over there. I'm getting really close to 500 subscribers. I'm up to 490, I think, at the time of starting this video, which has been really cool. It's been an 8-month journey, and I hope I've provided lots of valuable content to people. So I want to I'm aiming to hit 500 by the end of the week. So if you're on Facebook watching, which I can see there's a few of you on Facebook, looks like we're split again between Facebook and YouTube, head over to YouTube, Ethan Rooshock, hit subscribe. That really helps me grow the channel. And if you're listening to this on the podcast, I'm guessing you might have found it through YouTube. But if you aren't subscribed, head over there, hit subscribe. And while you're at it, go over to Facebook, like the Ethan Rooshock and Rooshock accounting pages. These things just really help me, and I really appreciate it. And it's what you can do to say thanks for the content I'm putting out. That's all I ask in return, is you support me and support the channel. So I'll go back into some of the questions I got through the week. So if you do have questions, make sure you do leave them through the comments and I'll answer them. But I will jump into a couple of those now. So the first one I got was, what's the best way to keep your tax records? And so I spoke about this briefly again in the video before on my channel, but any record keeping is better than nothing. So that's a start. Any way you can keep records is better than nothing. But I honestly think today's day and age, digital record keeping is the way to go. So many times I've seen people with receipts and they fade, especially things like someone like a truck driver. They got receipts sitting in their car all day, the sun hits it, the receipt fades, and it's no good. You need to keep that record. One, either they might be able to not read the amount and therefore they don't include it. If it completely fades and they get an audit, it really becomes hard to back that up. Whereas digital records obviously aren't going to fade. So things like the ATO My Deductions app, that's really good. You can go into the ATO app, go to the My Deductions section, and you can log everything as you go through the year. Buy that receipt, pull out your phone, take a photo of it, store it, and it's there. It's done. You don't have to worry about it. The other options, a lot of people have Google Drive or Dropbox. Again, take a picture of it, upload it into a folder. It can be as simple as literally having a folder that says 2021 tax, and you put all your receipts in there and they're ready to go at the end of the year. Whether you do your own return or you go to an accountant, you've got them all in one spot. I think that's the main thing, keeping your tax records in one spot. So for my first 5 or 6 years of working, I literally had an envelope, and literally anytime I'd get a tax-related receipt, it would go straight in there. So while obviously I've now hopefully moved to a digital system, that was an easy way for me to go, okay, they're all in one spot. And then I was putting them into a spreadsheet because I love spreadsheets, and that was an easy way to do it. So again, it's just making some system that you do through the year so you're not trying to chase all these things. There's nothing worse than trying to go, oh, you've got to scrounge through bank statements, and then you're going, oh, where's the receipts to match up that? And then that's when you skip things and miss out legitimate deductions. I think that's the worst thing you can do to cost yourself actual tax, is by missing out on actual legitimate deductions that you've spent money on, you were eligible to claim, but you just didn't keep the records for. So I hope that's helped. And yeah, let me know. Put a comment. How do you keep track of your things? I'd really love to do that, see what people are doing, and see, you might be able to collaborate and go, okay, well, that's a really good idea. I can see that. I didn't think of that. So I hope a few of those simple methods that you can use to do that. Then I've got one here. What's the average turnaround time on getting a tax refund? And that's quite common. People get their return, especially as we start to come up to July. There'll be people that want to lodge on the 1st of July and want their refund on the 1st of July. And look, unfortunately, it doesn't happen like that. But I'd say on average, it's getting quite quick. On average, I'd say the turnaround time is probably about 1 to 2 weeks, and probably leaning towards closer to a week for a really basic return that goes through the ATO system with no errors. And it doesn't necessarily have to be an error on the ATO end. It could just be anything that flags it, or it might just get caught up in the system. So unfortunately, there's no guarantee. I think the current turnaround time in the ATO is 28 days before you can actually follow that up. So even as a tax agent, if I lodge someone's return, I can't follow it up day one. They won't let me. They'll say, look, this is our estimated turnaround time. Once it hits that, then you can start to follow it through. But sometimes it can be random. Random things can hold it up, and it might just be it didn't go through on their end and it gets delayed. But I'd say the average turnaround time is 1 to 2 weeks from date of lodgement. And that's a really key thing. It's from date of lodgement. So obviously, if you do it yourself online, you're going to know when you file it. But something you can be aware of is when you're lodging through an agent, it goes from when they lodge it, not necessarily when you walk out of that appointment. So you want to make sure you check with the agent, okay, when will this be lodged? So quite often they may be waiting on a signature. So one, make sure you signed your return if you're using an agent, and do that straight away, because they're not going to be able to lodge until they've got that signature. And two, it may be their terms that they won't lodge until you've paid for it. So there are a couple of things to consider to make sure you speed up that process. So you can always check with the ATO, go on your MyGov account to see when it was lodged. You'll be able to see those kind of things. And like I said, it won't start until lodgement date. Their processing won't start till then. And then quite often you can see an effective date, which will show you approximately when the refund should be processed, allow a few days for it to clear into your bank account. And the other thing that could potentially delay it is if you're going through a tax agent that uses some kind of fee and refund service. So that's where they'll take the fee out of your refund. That quite often will delay it, because the money from the refund will go into a trust account. and then they will have to draw their fee out and then distribute the rest of it to you. So just be aware, something like that could hold up the process. So not all accountants offer that kind of service anymore because it can be quite time consuming and it is a little bit more complex, but it is just something to be aware. And the other question I had through the week was, what is the tax offset? How will it affect me and how can I get it? So I'm guessing this will be referring to what you're probably seeing, and it will come more and more in the media as we're heading up to budget night, depending on which way the budget goes, is talking about extending the low and middle income tax offset. But unfortunately, no one will probably word it like that. So I'll see if I can find an article about it where people word things quite interestingly to make them sometimes sound a little bit better than what they actually are. So I think I do have one here. Yeah, so I've got budget 2021, low and middle income earners set to receive tax offset for another year, which is actually worded quite well. But I have seen it already promoted in the media as like low and middle income earners going to receive an extra $1,000 back. And unfortunately, I see some accountants promote this as well and go, oh, get an extra $1,000 back if you lodge your tax return and things like that, which unfortunately, that's not how it works. You're not just going to get $1,000 extra in cash. So what they're talking about here is extending the low and middle income earners offset that they introduced last year to help with some of the COVID measures. So an extension of a tax offset isn't necessarily going to mean that anything's going to change going forward for you. And when they extend an offset in advance or bring in an offset in advance, you'll normally see the effect of that through your withholding through your pay. So if you're a salary and wage earner, you're going to see that effect by having maybe a little bit less tax withheld each week. So obviously an extension of this, assuming they change nothing and they just keep things as is, it actually probably won't change anyone's day-to-day thing. They're just not going to cut it. But they brought this in as to do with the tax reforms they're looking at doing, and there's a range of different tax cuts and stuff. They're wanting to change the brackets and extend some of the lower brackets to cover a much wider period, reduce the amount of different brackets there are. But obviously COVID put a bit of a halt to some of these things and they had to bring forward some measures, delay some things. So keep an eye out for budget night. I'll definitely be doing a video discussing budget night and what the effects are, because budget night is a big night when it comes to future tax effects and changes. And it's not just for businesses and super funds and stuff like that. They do definitely affect the individual taxpayer. And quite often the media and other accountants, sometimes they really like try to stretch it and make it sound better than it is. So I'd rather be realistic and say something like this, that it's not necessarily going to give you lots of extra tax back. So unfortunately, don't look for the article headlines that say, oh, get an extra $1,000 back if you lodge your tax. That's not how it will work. But there's definitely a good thing, but you've just got to be aware of that. And then the other part of that, how can I get it? The good thing with offsets like this is that they're going to be automatically applied when you lodge your tax return. So again, if you're going through an agent, the estimate they give you should have that factored in. If you're going to lodge it online yourself, again, the ATO system will factor that in. So you'll know what that is when you get your refund. So don't get confused and think, oh, I'm going to lodge it. I'm going to get my refund of $1,000. Oh, and also I'm going to get that extra $1,000 back. So some people think that they're getting that on top of that. It should be built into whatever software either your accountant's using or whatever the ATO is using. Keep an eye out for that. Ask the question, because sometimes these things can be announced on budget night and legislation doesn't pass for a while afterwards, and therefore the initial tax estimates might not be correct and might not have factored that in. So I think that happened, I think it was 2 years ago, that one of these offsets come in and it didn't happen until like slightly, I think it was like the couple of weeks into July. So those initial tax estimates weren't actually perfectly correct. So it's just something to keep in mind, that you might get initial estimates wrong, but just ask your accountant or check with the ATO when you're lodging a return to whether that has happened or not. So I see we do have another question here from YouTube. So this one is, what are some things people should bring with them at their first appointment with a new accountant? So it's a really good question that as we come up to July, a lot of people will consider, okay, am I going to stick with the same accountant? Am I going to swap accountants? And sometimes they start to get a bit overwhelmed of, oh, what do I need to bring if I change accountants? My old accountant has all my records. Look, honestly, it's not that difficult to change accountants. So that's the first thing I want to say. And that's not me just saying that as an accountant. It's honestly not that difficult, because a lot of record keeping now, especially they actually updated their system a couple of years ago, and your new accountant can access a lot of your old tax records. So they can access copies of old tax returns. They don't get the detailed copy, but they get enough that should allow them to produce 99% of what they need to complete your return. But the key thing, if you're meeting with a new accountant, make sure you have your tax file number, because without that, they're not going to be able to do much work for you. A lot of accountants will try and get your tax file number before the appointment because it allows them to do a little bit of prep work. Because at the end of the day, people are going to get a tax return done for a reason. They want to have to get the tax return done, not necessarily sit there for a couple of hours and have a conversation while the accountant punches in data. So quite often your accountant will want your tax file number beforehand, and that's just so they can start getting what's called a pre-filling report that will have your income on it, and they can load you onto their systems and just cut down the time of the appointment. So that's tax file number is the key thing. And like I said before, when I talked about having all your deductions organized, if you've got all that organized, obviously bring them to your accountant so that they can then get all of that done and include everything for you. So they're the key things. And then the other thing would be if you've got rental properties or assets that you're claiming. So again, talking about that depreciation, you're going to need to bring some kind of records to show how that's being claimed. So ideally, it'll be a full copy of your previous year's tax return if you know there's assets there that are depreciating, especially if you've got a rental property. And if you've got a rental property and had an external depreciation report done, so say through someone like BMT Tax Depreciators or something like that, make sure you bring a copy of that, because they'll need that, because that's going to have details in it. And you don't want to miss out on deductions just by not bringing records. So it's a really good question. So anyway, that looks like we're kind of wrapping things up with questions. So we haven't got too many more coming through at all. So I'll wrap things up there. Oh, hang on. Sorry. We have one more that's just come through. So is it worth doing salary packaging to help with tax? Now, this is a pretty complex topic. It is something I've got on my list of things I want to make a video about, but quite often it will be beneficial, but there are going to be some factors that make it a little bit confusing, especially if you've got HECS debts, but it doesn't necessarily mean it's going to be a negative thing. So it is a quite complex topic, but pretty much quite often what people are referring to is they may work for a not-for-profit and they say, oh, do you want a salary package? And sometimes it can be literally just a credit card they can do. Sometimes they even just pay it directly into your bank account, or they pay expenses on your behalf, and you're getting those earnings tax-free. So obviously that's a good thing because you're not paying tax on a percentage of your earnings. So it depends what type of not-for-profit or what type of company you're working for as to how much you can do. There's different limits, but it is normally quite beneficial to people. But there are some other things it can affect, because there's a gross up factor. So what your reportable fringe benefits, which is what they're referring to when you're talking about salary packaging, may be different to what you've actually physically received because of the way that all works. So it gets a little bit complex, and therefore you'll see numbers sometimes on a return that could affect other areas of whether it's offsets, or it could affect Medicare levy things. So you've got to be a little bit careful to have an understanding of that, especially if you've got a HECS debt. So it's a topic I will cover in further detail in a video, because it deserves a full video to talk about it. So keep an eye out for that, because it is an important topic to get your head around, and it's a very common question, especially when people change jobs and go into an industry that allows it. Quite often they'll go to their account and go, oh, should I do it? Because obviously the salary packaging companies are going to say, yeah, do it, definitely do it, because they obviously charge a small fee for it and they want you to take it up. But people then start to talk to friends and they go, oh, no, don't do it because you got a HECS debt. Well, that's not always true. So there's a lot of things to take into consideration, but it is, once you step through it step by step, you can work out whether it is beneficial for you. So obviously everyone's individual situation is going to be different, but definitely look into it, because there are a lot of situations where it's going to work out well for you. So that pretty much wraps things up. Keep an eye out for another video coming this Sunday where I'm going to talk about crypto taxes and how to track them. So I've recorded that one this afternoon, doing some editing. Hopefully over the weekend that will come out Sunday. Like I said, if you haven't hit subscribe, hit that on the YouTube channel and head over. Really want people to head over, follow the podcast, because that'll mean a lot to me. I thank everyone that's joined me throughout this, and I'll see you again hopefully next Wednesday at the same time. All right, thanks everyone.